What's going on, guys? It's John DeYoung here, and today I want to talk to you about mortgage brokers. What they actually do, how they get paid, and if you should use one. If you've never heard of a mortgage broker until now, according to the MFAA, which is the peak national body for professional finance brokers, as of January 2019, 59.1% of all home loans were settled by a mortgage broker, so they are much more apparent than you may think. It's commonly said that property investing is a financial game rather than a property game, meaning you can do all the research and the due diligence to find the perfect property, but if you can't get access to the funds, what's the point? You primarily get access to these funds through lenders, who allow you to leverage your deposit to borrow the full amount for the purchase price of the property. According to APRA, as of the June quarter 2019, there are 148 ADIs throughout Australia. An ADI stands for an Authorised Deposit Taking Institute, and basically it's just a financial institution licensed by APRA to do banking business, including taking deposits from the public. Of these 148 ADIs, there's only 93 banks. And of the 93 banks, there's only 4 major banks, including Commonwealth, Westpac, ANZ and NAB. These major banks are household names, and majority of Australians should have held an account with them at one point in time. They are in fact so common that of the $4.8 trillion of assets owned by all of these 148 ADIs, 3.6 trillion is owned by just these 4 major banks, resulting in a 75% share of all assets owned. This means that the other 144 ADIs have to fight and scramble for the remaining 25% of assets. Because they are so common, and we've generally held an account with them at one point in time, with all of our savings and transactions held up in that one bank, when it's time to finally go and buy a property, it's easy just to go back to that one bank so that everything's tied together. The problem with going back to just that one bank that you're most comfortable with is that you're going to be bound and limited to their specific packages and rates. Wouldn't you rather see what other packages and rates are available on the market and find the best ones that suit your needs? But stop for a minute and think about how you would individually approach all of these 148 ADIs to find their home loan packages and their rates. In fact, even think about trying to identify 10 or more. And while you're there thinking, make sure you smash that like button, as it seriously helps out with the YouTube algorithm. The truth is, you probably could do some thorough research online to 20 or 30 of these individual lenders. The problem is though that you're going to have to factor in for all of their minor details and read all the fine print to find the best package that suits your needs. Well, this is where a mortgage broker comes in. Applying for a home loan can be a daunting task and feel a little bit overwhelming. They are complex and difficult to understand, especially if you are dealing with multiple lenders and their multiple different packages. Mortgage brokers are very familiar with these lenders and have a good understanding of their broad range of products. They're essentially a middleman between you and the lender, where there's multiple lenders that want your business and you want to find that perfect lender. So the job of the mortgage broker is to make this process as smooth as possible. Although a mortgage broker isn't going to give you all of the available options from every single one of these 148 ADIs, they should be able to handpick some specific lenders that offer good packages and even negotiate down a better rate for you. They do this through asking about your goals and requirements and accounting for them in today's market. They then filter out all the lenders that have the best packages that suit your needs, and then request a reduced pricing from those hand-picked lenders. And it should happen in this order. Their primary goal is to find the lenders who are going to offer you the best packages, and then secondly negotiate down the best interest rate. You shouldn't go off chasing the lowest interest rate without understanding that there's different types of loan structures. Mortgage brokers will then handle the paperwork for you. You still do have to provide financial statements and banking details, but as far as the home loan application process goes, they'll ensure everything is in order. The best part about using a mortgage broker is that they actually crunch the numbers before you even apply for a loan. They'll be able to calculate your maximum borrow capacity, but more importantly, they should give you advice on the maximum amount that you should borrow, ensuring that you don't get into financial trouble in the future because they account for market fluctuations and future trends. If you're not sure what your borrowing capacity means, watch my previous video on how to increase your borrowing capacity. I'll leave it down in the description section below. A mortgage broker will generally work with 20 to 40 different lenders that they're accredited with and will pay them a commission. Yes, that's right. You as the customer don't have to pay your mortgage broker. The lender who wins your business does. Commissions usually raise some suspicions, especially in the property investing game, where it's a big red flag for property spookers. And yes, some mortgage brokers will try and push you to a lender that is going to pay them the most commission. However, by finding a quality investment savvy mortgage broker, they should have your best interest at heart, and it's not something you should really worry about. they'll be a key player in your property investment journey. The first step to finding a quality investment savvy mortgage broker is to ensure they're an accredited broker and are registered with the Australian Security and Investment Commission, also known as ASIC, holding an Australian credit license. You should also ensure that they're a member of an industry body such as the Mortgage and Finance Association of Australia, also known as MFAA. They implement the MFAA Code of Practice and ensure that the mortgage brokers are working in your best interest. In this era of Google reviews and social media, it's hard to hide behind unhappy customers, bad experiences, and negative comments. So make sure that you investigate their online presence before even approaching them. Once they look good on paper, in your first interaction, there should be a series of questions that you ask. My favorite question to ask is, do you own an investment property yourself? And if so, where have you bought and why? You want your mortgage broker to believe in property investing. You want them to have done it themselves. When you research and educate yourself for your own benefit, you absorb so much more than just doing it to fill the requirement of a job. And you're constantly trying to find new strategies and tactics to put into place. When asking why they bought in a specific area, I would avoid taking anything on as specific property advice. Unless they're a qualified property investment advisor, they shouldn't be giving you any property investing advice. Only financial and loan structuring advice. Some additional questions include, but are not limited to, how many lenders do you work with? How do you get paid for the advice that you're giving me? Does this vary in between lenders? If so, which lenders and by how much? If they're a member of the Mortgage and Finance Association of Australia, MFAA, they're required to disclose this information to you under the MFAA Code of Practice. Lastly, just make sure that you trust and feel comfortable with them. Buying a property is the biggest financial decision you'll ever make in your life. And by finding the right mortgage broker, they'll be able to structure your loans in a way that'll set you up for multiple investment properties into the future. If at any point you feel uncomfortable, pressured, or that something just isn't quite right, it's probably your gut trying to tell you something. Every industry has its shady characters, and you don't want to put your biggest financial assets in the hands of one. Once a mortgage broker has proposed all of the top available loans to you, you should ask them why they recommended those loans to you. What are the fees attached to those loans? What features are included in the packages? And what information will you have to disclose when applying? They should always give you a few options for loans. Talk about the advantages and disadvantages of every single one, and then finally allow you to make the decision of which one you want to go with. So in recapping, should you use one? Well, I would personally never apply for a loan without going through a mortgage broker. The benefit of them crunching the numbers before they even apply for a loan, ensuring that I don't overcapitalize on the money I'm about to borrow, handpicking all these lenders with the best packages and then even trying to negotiate down a rate for me, and then finally allowing me the selection to choose the package that best suits me. Not to mention, they put in some serious hustle to chase up the loan before settlement, ensuring that your transfer goes smoothly. And all at the cost of the lender. Why wouldn't you use one? If you think I'm being biased in any way, shape or form, I'm not a mortgage broker, I don't ever plan to be one, I don't know any personally, but I do use one for every single one of my loans. And I understand the value of having a good team around me. Have you ever used a mortgage broker? I want to know your experience. Leave it down in the comment section below. If you're currently with a mortgage broker that hasn't done all of these things in the past, it may be worth considering finding a new mortgage broker the next time you refinance or apply for a loan. Just note that if you're switching between mortgage brokers while you're in the middle of already applying for a home loan, it could affect your credit report. The more home loan applications that you put forward in your name, the more hits your credit report gets. The more hits your credit report has on it, the riskier it looks to lenders. So once you've found your investment savvy mortgage broker, stick with them for the rest of the home loan application process. As always, seek your own professional financial, legal and property buying advice. These videos are just my opinion and are general in nature. They should never be considered as personal advice. If you're keen for more content, make sure you hit the subscribe button and the notification button so you don't miss a video. And until next time, happy house hunting.